Which stock will perform best during the mother of all short squeezes? GameStop or AMC? GameStop or AMC? GameStop or AMC? Or actually, will both of these stocks squeeze during the mother of all short squeezes, and there's really just a small group of infiltrators trying to convince you to sell one of your stocks, both of your stocks, or all of your meme stocks? So stay tuned and let's make some money. This is another one of my quickfire Q&A videos, and today I want to talk to you about why both of these stocks will squeeze during the short squeeze, and actually why AMC could squeeze harder and officially be the mother of all short squeezes and not GameStop. And now I want to dive straight in with the key information. So, I want to start by talking about this Reddit post on why AMC isn't being used as a hedge against GameStop. I then want to go through a number of different articles and data points on why AMC may actually experience a more violent squeeze than GameStop will. So I think the first reason as to why these GameStop elitists are actually damaging the squeeze is by trying to convince you to sell other squeezable stocks that are in this meme stock basket. So as Krian put it in his original basket swap due diligence, there's a basket of meme stocks that move in tandem, signaling that some counterparty or multiple counterparties are on the hook for a ton of swaps, and that these meme stocks are most likely shorted as a whole basket through equity total return swaps. The prevailing theory is there's a massive amount of portfolio swaps against all of these meme stocks, not just against GameStop, not just against AMC, but against all of them. You can see from this chart, every time one of the meme stocks runs up, every single meme stock runs up alongside it. It happened back in January of 2021, March of 2021, June of 2021, and again in August and September of 2021. And the exact same thing still happens to this very day. AMC ran up back in March of 2022, and if we go to GameStop, GameStop also experienced that exact same run up. And interestingly, when AMC and GameStop ran up back in March of 2022, AMC experienced a slightly more violent run up. GameStop ran up 159%, AMC ran up 161%. Now you may say, Tom, isn't it better we sell all of our meme stocks and focus on one specific meme stock, being GameStop? But actually again, I don't really think that's the case. As Jackson Hunter tweeted, he said the entire idea that AMC is a distraction to GameStop is nullified by GameStop's plan to issue a dividend via stock split. He said it was never about needing more individual buying pressure. As I've said for some time, there may be a catalyst that causes the AMC and GameStop and all meme stocks to squeeze, or the squeeze may be caused by the entire market crashing. Us retail investors buying a few million more AMC or a few million more GameStop shares isn't going to cause the squeeze because we already own the float multiple times over. Selling your AMC shares and buying GameStop isn't going to cause the squeeze because it hasn't caused the squeeze in nearly the last 2 years. Back in January 2021, we know they didn't just take away the buy button for GameStop, they took away the buy button for AMC, for GameStop, for Nokia, BlackBerry, NAKD, COS, EXPR, Bed Bath & Beyond, and many others as well. Something else I found very interesting from the new GameStop report is this paragraph here. It talks about Robinhood's value at risk charge of approximately $1.3 billion and how that was divided. Robinhood calculated that of the $1.3 billion value at risk charge, approximately $850 million was attributable to AMC and only $250 million was attributable to GameStop. That means that during the run-up in January 2021, AMC was more than 3 times more risky than GameStop was to Robinhood. Therefore, clearly Robinhood's counterparties had much more short exposure to AMC than they did to Robinhood during this run-up. You may say, Tom, the legal short interest for GameStop was way higher than the legal short interest for AMC. The short interest for GameStop was like 130% and AMC only had like 40%, right? But again, this is only focusing on the legal short interest that is self-reported. This isn't focused on the true short exposure that they had from their swaps. Clearly, even back in January 2021, AMC was much more risky to these short hedge funds and they had a much larger exposure to AMC through swaps than they did to GameStop. Now you may say, Tom, from the 13F filings, Citadel have a net long exposure on AMC, but at the same time, Citadel also have a net long exposure to GameStop through their legally reported 13F filings. But we all know that through their swap exposure, through their synthetic shares, and through their married and divorced puts, they clearly have a much larger short exposure to both AMC and GameStop, not net long positions. You may say, Tom, there's tons of fundamental reasons as to why GameStop is better than AMC though, like the insiders of AMC selling shares, like AMC diluting shares, and surely GameStop just has a much better business plan than AMC does. Now, yes, AMC insiders have sold shares, yes, AMC has issued more shares, but at the same time, insiders buying more shares at GameStop and not issuing new shares still hasn't caused the GameStop squeeze. Yes, it may not be good that insiders are selling at AMC, yes, it may not necessarily be good that they're issuing new shares, but it's definitely not damaging the squeeze because GameStop hasn't yet squeezed either. Now, on top of that, there's also tons of other fundamental reasons as to why AMC is multitudes better than GameStop. Now, I can't verify this, obviously, because I'm in the UK, but as AMC Ape tweeted, he said, my local GameStop is dead AF, while my local AMC is absolutely packed. Now, what I can verify is over the last year and a half, I've seen maybe 100 different photos of packed out AMC parking lots and packed out AMC theatres. And in that last year and a half, I haven't seen one singular photo of a GameStop store being absolutely ram-packed with people. But what I have seen is a completely empty GameStop store with a letter pinned on the door that said, "Attention GameStop patrons, we regret to inform you that we all quit." The article was titled "Overworked GameStop Employees Walk Out and Tell Gamers to Actually Shop Elsewhere." It says, "We regret to inform you that we all quit. Our district manager has no respect for us as employees or as human beings. We've been told by our district manager that we were supposed to have had this store achieving sales quotas and running perfectly 6 months ago." As Trading Henny said, GameStop is a dead brick and mortar model. It loses tons of money every quarter and it will be bankrupt at this rate in only 2 years. They abuse their employees and they have a high turnover ratio. Now you may say, Tom, yes, the current GameStop model isn't really that great, but what they're planning to do and what they're currently doing with their NFT marketplace is absolutely brilliant. And while I do agree their NFT marketplace is absolutely brilliant, as Trading Henny says, their NFT marketplace will be dead on arrival. If you haven't noticed over the last few months, NFTs are dead, nobody's interested in them anymore, and crypto has obviously crashed by over 65%. So GameStop are getting into a new business model that's crashed between 65 and 80% over the last 6 months. And Trading Henny said GameStop elitists are so scared of the real mother of all short squeezes, AMC, and that's why they're so desperate to bash the stock. But I do think it's important not really to focus on the underlying business models, because the main reason why we're invested into AMC and GameStop is for the short squeeze, not necessarily to be invested into AMC for 20 or 30 years based on their underlying business model, just to hold the stock until the squeeze happens. And as Enables tweeted, he said, tomorrow the AMC cost to borrow will surpass the GameStop cost to borrow. He said, mark my words, I've been telling these GameStop elitists that AMC is the real play. He said, brace yourself for all of the FUD coming our way. They've made it fun for all of us and we held strong. It's paying off and they are shook. Now, obviously, both AMC and GameStop have seen a massive rise in the cost to borrow rate over the last couple of months. Both of these stocks are also showing 100% utilization. They're both showing new records on amount of shares on loan. They're showing new records all across the board and including those failed to delivers. Speaking of which, I actually touched on the failed to delivers yesterday, where AMC had over 1 million FTDs. The data for the first half of June has now been released, and we saw a whopping 2.6 million failed to deliver shares on the 3rd of June. This is the highest amount of failed to delivers we've seen since June of 2021, and it shows no sign of slowing down. All in all, as Ryan Cohen said, he said, to hell with the left and right, stop dividing the people. In this video, I'm not trying to convince you to sell your GameStop shares. I'm not trying to convince you to sell your AMC shares. I'm not trying to convince you to sell any meme stocks, because that's exactly what the shorts want us to do. They want us to be divided, they want us to fight, they want us to be confused, and they want us to sell all of our shares, both AMC and GameStop, so they can buy them and close out of their short positions without causing the squeeze. Could AMC squeeze more violently than GameStop? Absolutely. Do I know that for certain? Absolutely not, because I can't predict the future. Do you currently hold AMC shares and you're debating about selling them for GameStop shares? Do you currently hold GameStop shares and you're debating about selling them for AMC shares? My advice would be to sell neither of those shares and hold either of them, or continue to hold both of them. I don't necessarily know which stock is going to squeeze the hardest, but what I do know is that both stocks will squeeze. Even if GameStop squeezes first, AMC will follow it as well. Even if AMC squeezes first, GameStop will also follow alongside. As the original Korean due diligence shows, when a meme stock runs, all of the meme stocks run. Yes, some meme stocks do run harder than others at different points in time, but all we know is that at one point, all of them will squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.